what is going on, everybody? Welcome to another episode of the Rapid Review. Appreciate everybody joining live. As always, the chat is open both on X and on YouTube, so feel free to drop any questions, comments. We'll be doing what we do every week: full top-down analysis, overall market, sectors, leading industry groups. I'll be going through my specialized sub-industry groups. And then we'll be looking at any stocks or any questions that anybody has, with the goal of doing everything we need to get ready for next week. So without further ado, it's time for the rapid review. All right. You guys know the deal. There is the disclaimer: informational, educational purposes only, not financial investment or trading advice. All right, let's get started with the market. So starting out with the overall market, right away, looking at my stance, it's an uptrend. Exposure levels 80 to 100% for anybody who's been reading my my daily market write-ups. That has been my exposure recommendation for a while now, for various reasons. And then when you start looking down at the trends that I have, the Webby trend, which if you don't know, check out Mike Webster's YouTube channel. He goes over his 3-day trend. That is indicating on the S&P and on the NASDAQ in an uptrend. The 50-day, which is definitely a slower moving kind of trend indicator, that's uptrend on both indexes. And we are currently sitting just off the absolute all-time highs, but finishing the week with all-time high closes. So really, really strong week. We'll look at that on the charts. But looking at the index performance, so for the year, the S&P is up 3.39%, NASDAQ's up 5.27%, Dow up 1.07%, and the Russell leading out the year up 9.97%. When we look at the week closures, the big thing, seeing the S&P and the NASDAQ closing almost at those all-time highs for the week. That brings us to another week closing near those all-time highs. Super, super powerful moves. The weekly change, though, the NASDAQ's only up 1.5%, S&P up 0.55%, Russell up 0.36%, and then the Dow down 0.44%. So yeah, you can see where we're at on the indexes. Tech really, really being strong. We'll talk about that a little bit when we get into the sector analysis. But you're seeing that obviously within the NASDAQ. Looking at the moving averages, so we haven't had any changes on the moving averages in terms of crossing above or below in terms of price, because this move has just been so vertical. We've broke through those and just continued trending upwards from them. But we are sitting with every single moving average in its proper order. You have the 10, then the 21, then the 50, then the 200. This just signifying that we are now in a nice uptrend. We are continually uptrending. Not necessarily for me an indicator of anything, but obviously something you gotta see if the market continues to trend in a smoother fashion, continues to trend upwards. So looking good there. Definitely a ways off of the 50-day simple moving average. On the NASDAQ specifically, we're 9.39%. So we'll talk a little when we bring up the actual charts about the extended market that we're in, that we're all been talking about, and the real lack of kind of pullbacks or retests going towards the downside, and really what that means for us going into next week. So with that being said, let's jump over and take a look at what is going on with these charts. We'll always start off with the NASDAQ, and we do so on the daily. And again, any questions, any comments, agree, disagree, whatever you have to say, just hit me with it. I promise I won't get offended. All right, so like we said, it's just been straight up vertical off of the bottom. It's just been a really, really powerful move to the upside. When you look at how we kind of finished off last week, it was all-time highs. And again, just talking about that being super extended, really just 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 up days in a row. That brought us at the number 2 spot in terms of record consecutive up days on the NASDAQ. And knowing that we are just primed, highest probability, not highest probability, but very, very high probability of seeing a pullback within this market. And because of that, we were talking about just being careful about any new exposure that we're putting in, right? We had this follow through day that came down over here, signifying us to start putting some, well, this wasn't an official follow through day, but we did have on the S&P telling us to start buying into the market. And as the market continued to prove itself, we increased exposure. But as we start to get to these extended levels, you just want to be careful about new exposure, because a normal healthy pullback is going to likely stop you out of those names. You don't want too many things getting stopped at once because you have a ton of new exposure. So we ended up starting this week off fairly flat. It looked like we were starting to get some maybe downside kind of pullback pressure on Tuesday, but then the market just responded Wednesday with gapping up and yet another all-time high close. And then on Thursday, we saw a very, very volatile day as we rolled down. We tested those Tuesday kind of lows, and then we rebounded again as the bull stepped in towards the end of the day and recovered a lot of those losses. Still down for the day, still down 0.89%. But seeing that recovery, just it was very clear there was like that line in the sand for the bulls right at that Tuesday low. And then really just finishing off the week strong as we gapped up, continued to climb higher and close at all-time highs. So the big question is, was this little sideways action, is this all we're getting in this market? Is this the only pause, the only pullback? Is this going to be a real true lockout rally? Nobody really truly knows. And that's definitely something to keep in mind, right? We could get this and then go another vertical move from here and make it very, very difficult to enter in some of these names that if you haven't. But we could also pop up and then pull back. Nobody really truly knows. That's why we always prepare for all directions. So the way I'm looking at this right now is like this could have been that pause we were looking for. There were plenty of stocks that gave some handles or some tight action, which this was very, very constructive. We hit those all-time highs. It just makes me feel still, as you can see, I don't pay for this. As you can see, we're still fairly extended. It's definitely still a riskier market to be putting on a ton of new exposure. Doesn't mean not to take new buys. It just means be careful about how many new buys you're making all at once, with the likelihood of a healthy pullback giving us a stop out. In terms of distribution days, we'll talk about that. I'll bring it over, but you can see there's the distribution day over here on, what was that, Tuesday, where we were down and we were down on higher volume. But other than that day, we're seeing, some pretty good above average volume days as we started to make this climb, those additional follow through days and just really good action as we continue to climb up, and things just overall the trend is your friend, and the trend is up right now. Let's look at the S&P. Very, very similar action. Not much else to say about that, except we did have two distribution days, one here and one Tuesday, one Thursday gathered on here. But we still were able to make that all-time high close, which is very, very positive action. Looking at the weekly, to bring some context to this, 1, 2, 3, 4 weeks closing near those all-time highs, just skyrocketing up, and seeing the same thing over on the S&P as well. And then the only other thing that I really wanted to note over here is we were looking like we were getting some tight action, then we kind of started to get a little more volatile, but I would not say this is volatile in the overall scheme of things, as we kind of traded in this tight range. So I know some people are like, oh, look how tight we were, and then we started to kind of chop all around a little bit. Like, to me, this is not concerning, considering how big of a move this has made. To have a couple tight days, tight closes, I don't consider this to be a choppy, volatile action right here. But yeah, on the where are we looking to the upside? Where are we looking to the downside? The upside simple, it's all-time highs. The downside for me, I'm really looking at those Tuesday lows. That's like the super, super positive point if we don't break that. But realistically, we very, very could well break that and still be completely healthy market. And that also coincides with the 10-day simple moving average. For me, one of the biggest areas I'm looking at is, which on the NASDAQ is the October 29th high, kind of corresponds with the January 28th high, and also corresponds with that round number of the 24,000 price range. Ideally, I would like to see us hold above those levels. That to me would be very, very strong, super, super positive. But I also understand we can retrace back to the 21 and back to the 50. For me, the 50, and then especially the gap up low is like the ultimate. We break that, things are getting really, really ugly. But again, just giving you guys some context of the different levels, watching the market throughout the week and just seeing, okay, if we get to this level, what does that mean? And as we start to pull deeper and deeper and deeper, if we do, that would then signify me probably getting more and more bearish on that side of things. All right, Sag said, market looks nice and strong. I'm okay with that as long as the pullbacks are normal. And 100%, that's exactly what we're talking about. What is, as Mike Webster always says, what is, healthy, I forget the exact words used, but a lot of people say had that healthy, normal action. In the grand scheme of the uptrends. And for me, I think as long as we hold above that 21, that's to me healthy and normal action. Once we start breaking below that, it starts to get a little more cautious. What EMA is the purple line? The purple is the 10 SMA. The green is the 21 EMA, 50 SMA, and then the light gray being the 200 SMA. So yeah, the 10 we could easily break. That's nothing that really concerns me. Really, the 21 is what I'm keeping an eye on, because if we pull back to that 21, we're breaking back below that full round number. We're breaking back below those all-time highs. And it's like, if we can't even hold that 21, which that's a little concerning to me. Just kind of give myself a little bit of a line in the sand. Real quick though, let's jump back over and look at those distribution days. So here we have the distribution days. Again, there's the 2 on the S&P. There's the 1 on the NASDAQ. So 2 and 1, light distribution. They were all gained this week. We're not losing anything next week. We need a pretty big move to drop this off of the NASDAQ. Big move to drop anything off of the S&P. So ideally, we're just looking that we don't see any more kind of gathered up. But other than that, that is pretty much it, unless anybody has other questions. All right, let's talk sectors. So here's my kind of sector trend analysis. You could see still in the number 1 spot is energy. No surprise there. That's just the massive strong move that it's had. However, it has started to show some weakness, and I'll bring up these ETFs and we'll quickly look through them. But tech being there's no doubt about it right now. This uptrend is fueled by tech. It's made its way jumping up through the rankings. It was one of the weaker ones. Now it's up on top and in a really nice stage 2A uptrend. It's above its 50-day. And in the Mike Webster trend, it's been holding above that 21. So we've just seen this completely turn around and show tons and tons of strength. So let's jump over now to Deepvue though. And for those of you who don't know, I am a Deepvue partner. This is the tool I use for all my stock screening, stock analysis, charting, a lot of other really, really great things. Like we have the RRG chart over here. We'll go through in a second. But if you are interested in checking out Deepvue, I do have a free month trial code. You can check the link on YouTube, or if you go over to my X profile, you'll see I have the link in my description. You click my link and you use the code. For the free month, it is P2P. So that's the letter P, the number 2, the letter P, capital F free, capital N month. That'll get you a free month trial, so you guys can check that out. Yeah, I think this is by far one of the most powerful tools. They're tying some cool AI stuff into it. They have some crazy updates that are going to basically combine like every single tool that's in the industry, what they do the best and what other things don't have is now going to be coming to this platform. And it's at a price that basically is better than most tools out there. So really can't say enough good things about this tool, and happy to be able to partner with them. So yeah, here looking at this RRG chart, look, like we said, energy on my kind of outlook, which I consider in that like moderate cross between swing and position trading type of outlook, which is the style that I trade. But in the shorter term, in the 1 month momentum, I mean, look how we went from that leading straight down to the lagging, almost zeroing out in that like bottom corner of lagging on the energy. So, yeah, really, really negative action happening over here. But when you're looking at the tech, right, we saw a ton of strength in tech, and then we kind of saw it just pause, weaken a little bit, but not really too concerning. Just something to keep an eye We also saw, what was I going to say? We had XLY, consumer discretionary, showing a lot of strength as that came from the lagging sector into the leading kind of quadrant. Real estate has been kind of showing some strength as well. And then when you really look at the material sector, that's just been a real kind of crazy move. I mean, there's been times it looks strong, time it look weak, and it's kind of just circling around up here. Other than that, the utilities also going from what was weakening to leading and now down into the lagging area. So just kind of seeing how things have been transitioning here. Financials looking like it's improving, and that's been popping up a lot. You also have the healthcare, which is kind of really lagging back here. And other than that, nothing else much going on over here. Real quick, and we'll look at the sectors. So tech, obviously, just this is your daily, this is your weekly, just straight up looking very much like the NASDAQ. Energy, so energy again, showing weakness, right? Shaking out below the 50 and then getting back above the 50, starting to trade in this tight range. So overall, pretty weak, but not necessarily out of the picture just yet. Not necessarily out of the picture just yet. So we'll keep an eye on this and see what's going on there. Consumer staples, similar action, showing a ton of weakness, but looking like it's kind of bottomed off that 200. Materials, right? So materials was looking very, very strong and now trading in this very, very tight range. And we're seeing a lot of those materials stock charts looking very, very similar to this, hovering below those all-time highs, making these kind of higher lows on the right-hand side of this V-shaped type recovery. We'll keep an eye on that. Utilities just been kind of really, really choppy. Industrial, similar to those materials. Real estate skyrocketed up, then ripped back down into the base, right around those all-time highs, still overlooking positive. Consumer discretionary got back above the 50, now above the 200, slowly trying to recover in the trend. Financials, again, looking like he was trying to recover and then pulling back. Communications was looking strong. We talked about this sector a while, been a little weak this week. And then healthcare just looking like it's rolling over. So healthcare, nothing to note of. But really, if we're talking about what we really are focusing on, it's tech. Tech is leading this, and that's the most important thing right now. Let's see, no questions. All right, let's now talk about the sub. Where'd I go? There we go. Let's talk about the sub industry groups. So I've kind of built my own sub industry groups thanks to AI. Couple thousand stock, I think like 3,000 stocks, kind of worked through over a couple weeks, really classifying these things into groups that I think make more sense with a lot of the themes and things that we're seeing. I don't want semiconductors being just broad semiconductors. If there's a time where we're seeing a very, very specific strength within certain ones, I want to know that. Memory being a prime example of where this has been showing strength for a very, very long time. And you can see with those names, everybody's been talking about these names for sure. So when we are looking at, though, the leaders for this week, so leading for this week, it's semiconductors. Semiconductors have been the leaders, super, super strong. If tech is leading, it's mostly the tech fueled by semiconductors. Here are the groups that we're seeing here for this week that showed a lot of strength. But yeah, overall, broad-based semiconductors showing a lot of strength. We did see some pop-ups in the oil area, especially with some of the talks of what's going on in the news. And we also saw some energy, solar energy, and we'll look at that ETF to see how that trend kind of looks. But yeah, the big talk being all about semiconductors. On the downside, quantum, we had kind of talked about quantum these last couple of weeks showing some strength, but overall being in a macro downtrend. Space economy was very, very strong. Saw some weakness this week. We'll see if that's just kind of the healthy pause and pullback as it's around those all-time highs, or if it starts to recover. Some of the airline travel stocks, but the big thing here on the weakness side that stands out to me, gold miners, copper miners, a lot of those metals, minerals, miners type of stocks that were last weekend looking very, very strong going into this week, kind of lagged. Not that a ton of them completely broke down, but still lagged. And that was something that kind of stood out to me this week. So let's go back over to Deepvue and let's look at a couple of the ETFs. So we can just I like doing this because I think it's really good for understanding just the overall trend of things. Let's do it on, let's do it here on the 1 week, and we'll go here on the 3 month. Try to speed this up. All right. All right. So semiconductors, again, daily, weekly, absolutely vertical. You can't get more clear than that. I mean, look at that. If we are looking, cannabis still, like, this is nothing I really want to play around with right now, but this fueled by, I'm sure, the news of Trump making a Schedule 3 or Class 3, Schedule 3, whatever, drug. So that probably fooled a lot of the volatility in this week. Some of these alternative energies are starting to perk up. Hydrogen being one of them. Solar. So solar really giving this kind of basing pattern right here. This was showing strength in the downtrend. As it kind of was just like moving. It's showing strength probably prior to the downtrend. It kind of started to flatten out and now show some strength. It's building up the right-hand side. So the solar area is something I'm definitely interested in, especially if we're seeing some of these kind of alternative energy plays coming into play. Here's your oil and gas ETF. Some of these the quantum on this side. Also, keep in mind when you're looking at these holdings, it's not pure quantum plays. There's a lot of semiconductors and stuff put in this. So though you're looking at the quantum ETF and seeing a lot of strength, when we look at some of these quantum names, we can do that too. They're not as strong. What else? Blockchain stuff looking like it's starting to try to create an uptrend. Lithium has been very, very strong. That's another group that we've been talking a lot about. Bitcoin, again, looking like it's trying to turn around, but not just yet. They have your gold. A lot of the gold, copper ETFs, you're seeing this kind of rolling over, like almost like this is something that you might want to play to the short side. I'm not the greatest short side, but it's just looking like it's in that macro downtrend. And I don't really see much else that I want to kind of bring up on this side of things. Did I bring up hydrogen? I did bring up hydrogen. All right, cool. So while we're on the topic, and this is one of the things I do love about Deepvue, they actually have a very good list of some of these quantum names. So when you look at some of these true quantum names, right, like they look horrible. So that's just something to kind of take note of. Like, yes, when you're looking at the Googles, when you're looking at, the NVIDIAs, the AMDs, Form, IBM is horrible. But when you're looking at some of these real true quantum names that were going off last year are looking pretty weak. So to me, that's where it's sometimes digging into some of this stuff and really understanding what's causing the move and not saying like quantum's doing great. Like, well, is it being fueled by what? You know what I mean? And to me, this is not being fueled by the pure play quantums, but mostly by a lot of these semiconductors and by some of these bigger cap names for sure. All right. Let's see. So that's all we got on the industry subgroups. Don't see any questions kind of coming through on that. So before we get into stocks, let's just summarize kind of market outlook, industry outlook, and then we'll start getting into some of these stocks. While I'm going through this, feel free to drop some of those names in there in the chat. Very, very strong uptrend. Hopefully, you followed the follow-through day signal. You allowed the continued strength to let you pull into the market. You focused on a lot of the leading groups, and you found yourself in some leading names with good exposure, taking advantage of this uptrend. If you have not, it can be very, 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 very frustrating. I get it. Do not make that start. And this is where emotions start coming into play and people start really forcing trades. And the reason I keep bringing up how we're extended, haven't seen a very, very big pullback is because what tends to happen with a lot of people is they poo-poo that follow through day. They don't increase their exposure. The follow through day works, the market goes on a run, and everything starts getting extended. And now they feel like, oh my God, I screwed up. This market's going on without me. These leaders are going on without me. And now what? And then they start going, I need to chase. They start chasing, and they start chasing right as that pullback comes through. They buy all these names pull back. They hopefully trust their stops, and then they get stopped out of everything. And now they just took a bunch of losses, and now they saw their equity dip. And while everybody else is seeing this kind of increase in their portfolio equity, they are just getting hit at the wrong times and just seeing the equity turn to the downside. And then these are a lot of times the people that go, this trading strategy doesn't work. I bought a breakout. I bought this. I bought that. And everything kind of stopped me out. So that's where people get frustrated and they start going down a rabbit hole and seeing some negative impact to their performance. So that's why I've been hammering this every single day, every single weekend. If you have not got proper exposure, do not chase. I'm not saying don't buy. I'm not saying don't buy a name. If a name looks strong and a name breaks out, I bought Taiwan Semiconductor this week, but it was the one add to my exposure this week. It wasn't that I went from 20 to 100%, and now I have a higher risk of all those things getting stopped out. I simply went from what was like 100. I got stopped out at AEM, and then I bought Taiwan Semiconductor following up after that when it broke a kind of downtrend in the handle, and then I increased my exposure back to 100%. So I have names that have cushion that I could comfortably allow a pullback and not feel like I am taking a big hit. And then I maybe have some fresher names that are a little likely it could get stopped out if we get a pullback, but that doesn't destroy me. It doesn't, where I go now back down to 0%, and then I'm playing this chase and catch up game again. So I hope that makes sense. I know I've been saying this like crazy. I'm saying it like crazy for a reason. I've experienced it personally. It sucks. It's frustrating. And sometimes it snowballs, and that's how people have really, really rough years. So be patient. That's a big, big piece of trading, is knowing when to be patient and knowing when to take action right away. And that is one of the things that takes some time to kind of prevent yourself from becoming those boom and bust type traders. Cool. All right. Stocks. Let's go back over to Deepvue. I don't see. Okay. The first one that somebody actually mentioned in Discord that I promised I would bring up was AMD. You guys might know I tried to short AMD, and this is why you have stops. I tried to short AMD when the market was looking weak. I got stopped out, and it was a small loss. Actually, it happened twice to me. It's 2 small losses. No big deal. Part of the game, but this is why you have stops, because this has just gone on an absolute tear. Absolute tear. If you, let's see, let's just look from the bottom for the fun of it. 80% move off of those bottoms. Just massive, massive move. Friday being the big day with a 13.91% move. Just absolutely vertical. We're seeing the volume kind of continue to just climb. Because semiconductors are looking so strong. You know, it's just, this is one of those leading semiconductors, and it is just taking off. In terms of where we're at now, because there was really no context behind this. Carlos, I appreciate you dropping this. Oh, Carlos said, hey, I can't join the live. I'll catch later. Okay, cool. Well, I'm covering this now for you, Carlos. So you didn't really give me too much context as to what you were wanting me to cover on this. So looking at it where we're at now, it's obviously clearly extended. Ideally, this turns into like almost like a high tight flag type of setup, holding somewhere like sideways from here, and then we can kind of see this take off from there. Ideally, in terms of where this could have got entered, like almost like a lesson kind of here. Look, your traditional CANSLIM position trader might have bought here on this big up day as we kind of broke out. You know, we opened right here and we started to break out. And if you bought right at that pivot on a weekly, really on a weekly chart, I could see people doing that. But also there was some risk of a kind of pullback. But at the same time, this was early in the uptrend. So I'm a little more willing to buy those kind of weekly base breakouts. You could have even bought down in here, somewhere around in here. Was another opportunity that you could have got in. But at this point, it's just extended. Just take it, look, put it on your watch list, keep an eye on it, see if something constructive can form, and just take it from there. Don't forget that many stocks are doing their run up to their earnings date. Yes. So if we're looking here, and this is another reason I love Deepvue, quickly can come over here. I see the flag, means it's coming soon. Means we have earnings within the next couple of days or weeks, and May 5th. So that's another kind of risk that we have. So hopefully we tighten up. Hopefully we see this kind of go sideways into earnings, and then maybe get like an earnings breakout from that high tie flag and give us an entry. Time will tell. Again, overall, this is extended, so keep an eye on it. Nothing much else we can do with this name. Taiwan Semiconductor. I said I bought this week. This was semiconductors being a leader with my top-down analysis. Market looks good. Tech looks good. Semiconductors look really, really good. And Taiwan Semiconductor, clear leader within this space. The fundamentals are very, very good. If you know anything about their business, they tie into basically the entire industry and a big manufacturer for a lot of these companies. And I just really liked this sort of cup with handle type of pattern that was forming here. I liked the fact that this pullback was a nice tight kind of pullback in base, just less than 20%. We started to climb up the right-hand side, and then we kind of formed this like slight downtrend in the handle right here on what that was Wednesday. I think it was Wednesday. As it kind of broke this downtrending line, once it popped up over here, broke this downtrending line, I was kind of keeping an eye on it. I liked that I was able to have, let's just go off the open. I was able to have a pretty tight stop to that prior low. And it caused me to enter into it, not realizing, not knowing that it was going to have such a powerful move that this was going to take us through that handle breakout. So luckily was able to get in this on a little tight of an entry, thinking it might have been just an early entry. Ended up being an actual kind of cup with handle type of breakout there. So yeah, but glad to have gotten into that. Again, another one of that is extended. But this is why it's very, very, very important to build these watch lists and be paying attention to these things, because sometimes they could just move so quickly. And if you're not prepared and don't know what your plan is, you can get caught flat-footed. So while I have my portfolio up, SanDisk acting very, very healthy. Kind of had this mild pullback, broke to all-time highs on Friday. We got earnings coming out next week. So I'm going to see how I handle this. I have my cushion that I need. I might reduce some of my exposure, might not. We'll see what my plan is with this as I go through my weekend and kind of break down my overall risk and everything that's going on. This name, Roblox. So the space stuff, like I said, space kind of starting to show some weakness. I had bought this, I believe, on this gap up kind of right around here. And I am basically flat on this right now, or a little greater than flat. This pullback, though, not super concerning to me, because it's kind of like that cup with the handle. It's pulling back on lower volume. We saw the volume coming through in here. It had the weakness in the space stuff for this 1 week. But overall, this is definitely a name that I'm still comfortable being in. Otherwise, I would have sold it. Stop hasn't been hit, and I'm just kind of being patient to see if we get just a healthy handle and I don't hit my stops. My stop is at the low of the day over here, which we're well above. So I'll keep an eye on this and see how that all kind of works out. MU, another strong mover. This was one that I bought here on the gap up. Had added a little bit as we broke kind of this little tight flag area over here. And it's starting to continue to trend up, so that's good. And then my other laggard in my portfolio, Albemarle, however you want to say that. Look, not happy that we had this big volume breakout and then pulled back. Not happy. But at the same time, we saw some support here at the 21. We're holding above those levels. I don't want to just jump out of this name because of this one week of weakness. My stop is in. If my stop gets hit, that's fine. sometimes you do have to be patient. Sometimes you can't just see weakness and then jump out only to find this thing then surges on without you. That's why our stops aren't always incredibly tight. And sometimes you need to be allow that wiggle room for things like this to happen. So you're not getting that death by 1,000 cuts, getting stopped out of everything all the time. When, right now, the way we look at it, it still looks like it's creating higher lows. We'll just see if, like, even higher highs. We'll just see if this is going to kind of continue, or if it's going to stop me out. And then I also have no problem re-entering. If it stops me out, presents a good entry, shows some strength, looks still good at the time, I will have no problem re-entering. If it shows weakness and then just isn't working, then I have no problem just not buying that name too. So, all right. Not a lot of other names being talked about, guys. Circle. This is one I know a lot of people are talking about. IPO stock, looking like it's starting to turn around. Right. It looked horrible. Then we have this big uptrend, and now we're starting to have the uptrend, possible basing, hovering below the 50, coming up here, wedging downward with really tight action, finding the 50-day. This name, definitely something I really am going to be paying attention to this week. Depending on my, I don't know if I'm going to have the capital where I want to buy something like this, because I am fully exposed right now. But still, needless to say, a name I wanted to bring up. This, I have no clue why this is on here. This shouldn't be on here. I must have accidentally clicked that. Other than that, this is just from last week. I haven't done my full screening routine, so I'll just click through some of these names that are left over. The shipping was showing some strength. A couple of these names are kind of extended, though. Credo right around those highs. Dock end, just keep going. BE with the big gap up. I know some people were able to get in on this. This is a name I've been watching too. It's a little more volatile. It's just kind of on here as a watch. All right. I don't know if anybody has brought up. We'll bring it up just for fun. Car. Oh man, this thing is this is wild. Absolutely wild. So if you were somebody who shorted this in here, good for you. I don't like shorting these parabolic moves because, I mean, look, 70% move, 23% move in a day. Like, we were having some crazy high just gap up in moves. So to go short something, to watch it gap up and go up 17, 13% the next day, not the kind of risk I want to take for what gain. But for those who maybe did catch the short, nice, good for you. Definitely a highly talked about name. All right. Oh, so we had talked about, right, earnings. Earnings are in here. News, earnings next week. All right, that's going to load a little bit. But we have GDP on Thursday, so that information coming out. Nothing other than that. And then when we look, sorry, I'm jumping all over I do have a Deepvue screen for that. The big thing coming up this week, we got a lot of big cap name earnings. We got Apple reporting. We got Amazon reporting. I believe Google reporting. Meta reporting. Microsoft reporting. You have some of these memory, right? We talked about SanDisk, STX. This is a huge earnings week. Very big earnings week. So going to be very interesting to see how the market reacts to BE reporting, another name that a lot of people are watching. Going to be very interesting to see how the market reacts to earnings. And that could tell us a lot about what's going on with this market. If we see some real positive reactions, it's going to be great for the market. If things look like they're just not reacting how they should react to earnings, that could give us a sign that things maybe are going to be a little weaker for a little bit. But other than that, man, I think that's pretty much covering the bases of it. Capital off. Look, make sure you are screening every single weekend. Make sure you are going through those charts. One of the things I've noticed is people want, like, and this is my opinion. This is how I look at the market. And I also want to say I do love screening and I love looking at stocks and I love doing this clearly. Sometimes I think people will just want, like, give me a few names, or give me the small list of like what's going to pick the big winners. And I get it. People don't have a ton of time. Believe me, I don't have a ton of time, but I do this a lot in my free time as my what I enjoy doing. I look through arguably 500 to 700 charts a weekend. Um, a lot of that is quick flipping through. Like if I'm going through some of these names, like right now, if I'm looking at the weekly, let's see, like this, I'd be like, okay, this be a base. This is kind of extended. This is extended. This is extended. This is a base. Like I'm going through these things quickly. And then once I kind of find what I see is something that I need to pay attention to, and I get a bigger watch list, I kind of trim down from there. But the point of what I guess I'm trying to get at is a lot of the brunt of the work is done the weekend. I personally believe as a trader, you should be looking through a lot of stocks. It helps you get a good feel for things, know what industries are doing well. Are these industries extended? Are they building? Are they turning around? Are you seeing a ton of biotech names? Okay, that tells me there's a biotech is probably strong. So as much as I am a top-down analysis type of person, I'm also getting a little bit of a bottom-up kind of feedback from the market because of how many stocks I do screen and look at through the weekend. So have your criteria, know what you look at in terms of stocks, what is your bare minimum. And then for me, it's 3 pools that I look into, or 3 things that I think about is what I want to be looking at for stocks. I either want something that's got exceptional fundamentals, the classic CANSLIM characteristics, amazing earnings, amazing sales, a new product, institutional sponsorship, just the bulk of like a CANSLIM fundamental stock. Or I want something that's extremely high RS, which also kind of corresponds within leading industry. Those are the kind of buckets of what I'm looking at. And if a stock doesn't fall into one of those buckets, it's off my list. And then from there, my list is basically comprised of, do I see some sort of weekly consolidation? And then on the daily, I'm getting things a little tighter and looking for really a little more of the nuance around that base to see if it's something that I really want to be watching throughout the week. And then I try to get my list down to like 10 names for the week. Do that every week, and that's going to help you with reading charts, identifying bases, seeing how things react. And really the bulk of our job as traders is having a very, very good, strong routine, both on a weekly and on a daily basis. You don't have to be sitting in front of the screen. The majority of the work can be done over the weekend. As long as you prepare, you don't have to be sitting in a room like this every single day when the market's open, following everything that's going on. So, all right. Looks like no questions, no stocks, nothing else anybody's brought up. So yeah, that is all we got for this week. There you guys have it. YouTube link, X link. If you're still watching, and you're not subscribed, subscribe to the YouTube channel. And you could also turn on notifications. I do try to tell everybody when these videos are going out, when I'm going live, so you guys can communicate. We can kind of have a little more back and forth. But also feel free to drop comments if you're watching this post live and you have a question or a comment, or again, agree, disagree, whatever it is, drop a comment, and I will 100% get back to you. Link in the description of the YouTube for Discord. Huge shout out to everybody over there. And then the X link over there. And yeah, also keep an eye out. Every day, Monday through Friday, I do the Bobby Breakdown, which is a written article doing essentially what I've done here in a pretty organized way, going through the market top down and giving my feedback as we go day by day through the week, because things can change and they can change quickly. But overall, stay disciplined, think risk first, do the work, do not slack off, and just, yeah, continue to keep learning, continue to keep getting better. Trading is a long journey to go from starting out to being consistently profitable. But if you do enjoy it and you do like the challenge, it is a great thing.